Welcome to the 13th edition of the Genghis Weekly Investor Briefing. My name is Daniel Ogeto and I'm from the Marketing and Communications Department. I will be your host and moderator for this session. The third earnings quarter season is here, and we will have our very own Churchill who will expound more on this. And our guest today is Mathew Kabeere from FXPesa. He'll be taking us through the global markets and the effects of the just concluded US elections on today. Gerald is not in, so Churchill Ogutu, who is our head of research at Genghis Capital, will be taking over the fixed income and the equities section. Over to you, Churchill.
Thank you, Dan, and a good morning to everyone on the call. Let me share my screen. Okay, so I'll start with the equity segment. I'll be stepping in for Gerald, who right now is attending the Safaricom first half earnings briefing. So in terms of market recap for last week, the indices were mixed. Nairobi All Share Index edging up by 0.9%, while the NSE 20 declining by 0.8%. In terms of turnover, it rebounded quite massively by 86.7% on a weekly basis to 3.1 billion, which was above recent week's average. So that was a good performance last week. In terms of top gainers, we had Olympia, Uchumi, and Kabasi, while on the other side, we had East Africa Cables, Kenya Re, and Limuruti as the top losers. Foreign activity, the participation was up 68.1%, and we had a net outflows of 1.2 billion, which was largely skewed by exits on the KCB counter. We saw accumulation on Safaricom and NSE, while the top traded counters by the foreigners were Safaricom, KCB, Equity, and EABL. No surprises over there. Now moving on to the NSE vis-a-vis African peers. Right now on a year-to-date basis, the NSE Nairobi Securities Exchange All Share Index has declined by 15.1% against the African average of 11.4%. So that's a steep decline vis-a-vis the average. In terms of market price to earnings ratio, this is basically telling us attractiveness of the market. In Kenya, we are a bit expensive compared to the African peer at 9.7 multiple vis-a-vis 8.3 multiple of the African peers. Dividend yield, we are more or less within the average at 4.8%. Moving on to the trading ideas for the week, we have some we are still bullish on strong stocks. The stocks, particularly which have the buffers, at least to ride the storm, that is COVID-19. Right now, we are looking at particularly the KCB and equity counters. Last week, they breached the 35 shillings buy levels. So we have been seeing most of the pricing pressure on account of earnings release. This particularly starting from this week, we expect that there could be some earnings from the banks and that even dictated even the pricing pressure over the course of last week. Right now, for opportunities for long-term investors, to the two counters which have the highest return on equity, despite booking larger than average provisions in first half results. We are still out of the consensus trades. We are looking at a speculative buy on Kenya Power. We are quite cautiously optimistic. There was a tariff review proposal that was put out sometime last week to the tune of an increase of 20%. Hence, we are quite speculative on Kenya Power at the moment. And if it's been resolved, it could see some cost pressures into the counter. Corporate calendar. We are seeing right now, as I mentioned earlier, first half earnings release are ongoing. We have seen that even the top line numbers that has come up, it's been more or less in line with our expectations. We had estimated a decline of earnings per share to 82 cents. It's come to 83 cents. We also had estimated that M-Pesa revenue will decline by 14.8%. It's come by 14.5%. That said, we'll be still nitpicking the earnings results and we'll putting out a note in the course of the day. Now moving on to the macroeconomic review, we are looking at what happened last week. We had the Stanbic Purchasing Managers Index. It had a record at 59.1. Any number above 50 is telling us expansion activities, particularly in the private sector segment, and we had it at 59.1 for the month of October. That, of course, has been bolstered by even the easing in the restrictions that were there, containment measures that were there, and it had spilled over even to the private sector segment. Also, another issue that came out was there was from the news flow that Treasury is discussing with IMF for a new budget support. That particularly, in case that funding comes into fruition, it had not even been preempted in any of the recent Treasury documents. We had that 2020 budget review outlook paper, that one that was approved by the cabinet. It did not even insinuate in any form that it would be this kind of funding by IMF. So it's quite a surprise for us. But that said, we are looking at an environment where revenues are expected to decline, and we are seeing even in terms of the financing, we are going to hit 1 trillion in this current financial year. So for the net domestic borrowing, you're looking at 600 billion. Already that is a shock to the banking sector, or rather to the domestic markets. It's a plus for investors, but it's quite a shock for the markets. Hence, it could even signal that there will be no robust private sector credit growth in the interim. So we are seeing that IMF budget support will be likely to come in, at least to reduce that net domestic borrowing quantum. News flow is talking about, we haven't seen any quantum that will issue from this IMF budget support, but will be on the lookout on the progress from these discussions. Moving on to fixed income review, last week we saw a dip in terms of secondary market T-bonds activity, whereby it declined by close to 38% to 7.5 billion. Our trades were majorly on the infrastructure bonds. Most of the infrastructure bonds are attractive due to their tax-free appeal. So that has propelled trading activity in the last couple of weeks. And last week, it was the major focus by investors. In terms of T-bills, we saw the performance jumping up back to positive territory, with bids coming at around 27.8 billion, reversing the last 2 weeks trends, whereby it was below the 24 billion that the CBK was seeking. Our yields have increased by an average of 0.64% since recent lows, that was around mid-July. And looking at quarter to date, between end of September up until this last week's auction, you've seen that yields on average have gone up by 0.32%. Looking at the review of last week, liquidity trends, average interbank rates edged up by 0.32% to an average of 3.34%. CBK basically just assesses the liquidity situation in the market on any given day. And last week it was majorly on mop-ups, basically trying to reduce the excess liquidity in the banking system. So on cumulative basis, what CBK sought to mop was 100 billion, but it managed to receive 48.5 billion, whereas it's accepted 42.4 billion from these mop-up activities. Net domestic borrowing, as per our estimates right now, is at 224.5 billion. And if we include the overdraft facility from the CBK, that's 240.6 billion. So that's a difference of around 16.1 billion that has been tapped from the overdraft facility in the course of this financial year. Just looking at, if you compare with the target of 600 billion, right now, domestic borrowing is around 37.4% of the target of the fiscal year. So last week, CBK announced this month's primary bond. In addition to that, it also opened up a tap sale of FXD1 2018-25 that was part of last month's dual tranche issues. There were two papers. So the longer paper that had the most demand by investors, that's the one that even CBK has come to offer a tap sale. They are seeking 20 billion, so first come, first serve basis. As soon as they get the 20 billion, they'll close that tap sale. So that is still ongoing, in addition with this month's November primary bond issue. So for this month's issue, you are looking at a reopening. So I think right now we've seen more reopenings of papers as opposed to issuance of new papers in the course of this financial year. So it's a reopening of an FXD2 2013-15 and FXD1 2018-20. So the target is 40 billion and the use of proceeds is budgetary support. All these papers, as they were issued longer than 10 years at the time they were brought to the market, so they have a withholding tax of 10%. So the tenor for the FXD2 2013-15 is 7.52 years. It has a coupon of 12%. The implied yield as at the end of last week was 10.99%. So it has a clean price of 105. So for every 100, as an investor, you're paying 105. Basically, that's it. So look at it this way: for every 100,000, as an investor, if you want to buy it, you pay 105,025 shillings, clean price. But then again, you have to pay the accrued interest portion of that, so it's come to 105,639 shillings that you'll pay as an investor if you want to get into this bond, looking at the implied yields as at the end of last week. So the other paper, FXD1 2018-20, so that is 17.4 years. It has a better coupon rate of 13.2%, no brainer there. As most of these bonds, the coupon is dictated by the yield or the accepted yield at the primary issuance. So no brainer, it's higher than what was there for the FXD2 2013-15 at 13.2%. So it has an implied yield of 12.7%, clean price of 103.35 for every 100 per. So dirty price of 105.03%, 105.02. Finally, our week's trade is FXD1 2010-15, coupon rate of 10.25%. We are looking at buys between 10.10 to 10.2%. It's an attractive entry for investors who want to reduce their duration. Let me stop there and invite Mathew to take us through the other bits. Mathew, over to you.
All right, thank you so much, Churchill. Let me share my screen. Okay, thank you so much. My name is Mathew, and on my side, I will be looking at the opportunity in the global markets and the week ahead updates. And I will first start with a small topic on how you can build your trading strategy, and then after that, we look at the markets, how it has been last week, and what we are expecting this time round. So, of course, when you're trading Forex, one of the most important things is that you have a trading strategy, because if you don't have a trading strategy, then it means you don't know what you're doing, and then it might be a gamble. That's the difference between someone who knows how to trade and someone who doesn't know what they're doing. So what's a trading strategy? It is that defined rules that you use to make a trading decision. You must have that. Like, you know, if I see this and this, then I'm going to place a trade or not place a trade, or wait for a few minutes or maybe wait for some moment to see a given indication. So a trading strategy is just that set of rules that you use. So when you create a trading strategy, you need to test it first on a demo account. I've insisted on this severally, that learn on a demo account, get education, and once you practice and you test it and you note that one entry point for you, then that one will give you a little bit higher edge to win in the market. So here are the steps that you can follow to form a trading strategy. Make sure you choose a time frame, right? Don't just bump on any trading on any time frame and you look for a maybe a candlestick pattern and you just want to trade there. Make sure you stick to at least maybe 2 time frames, and doesn't mean that you have to neglect all others. The thing is, you may decide, for example, you want to check for a given indicator on a 4-hour time frame or a daily time frame, then go to manage your entry and exit into the trades on a lower time frame, maybe 1 hour or 30 minutes. So time frame is very important. Number 2, remember you have to analyze the market, because you'll be entering your orders based on predetermined exit and entry levels. So you need to analyze the market, be sure where you want to enter and where will be your target, for example, and where will you be exiting to limit the losses in case it doesn't go your way. So there's so many indicators. Make sure you choose appropriate indicators, and you can't use everything. Choose at least a few, right? You can maybe combine 3 at most, but if you can combine 4, then better for you. But the number of indicators you're going to use, the way it's going to be, the easier it is going to be for you, and will give you an easy time to get good opportunities in the market. So apply appropriate indicators, and then you can use another indicator to confirm for you whether you should be placing a trade or not. After that, then you define your risk, right? Make sure that as you're entering a trade, you want to buy, you want to sell, you've speculated on the market, make sure you understand what are you likely to lose. Yeah, what are you likely to lose before even you start looking at the benefits or the reward that you're going to get. So stop loss is very important there, and make sure that you allow some good room for your for your trade to play out, because you don't want to again place your stop loss within a very small margin that is just going to be hit within a short time, and the trade again proceeds in the direction that you were expecting. So define your risk, and don't again take too much risk. Don't risk more than you can afford to lose. All right. So just to repeat myself and insist on this, define your entries and exits. Identify where you want to enter and exit to get the most profits. So entries, get the ideal entry, and you should always enter a trade after the close of a candlestick. Of course, after all your indicators confirm that yes, you've got a good opportunity to enter, make sure that as you're entering the trade, it is at the end of the candlestick or the close of the candlestick in the time frame that you're managing your orders at. Exits, again, once you place your stop loss, you can either choose to use a trailing stop to make sure you close up on the profit side, so that even if the market trend goes against you again, you won't even get any loss, because you're using a trailing stop which has already closed up the profits using the stop loss. Those ones are very important, very important. And once you form those trading strategy rules, make sure you write them. It's always good to write them, and that is going to remind you every time that you have to enter a trade. Then you must see 1, 2, 3 occurrences in the market, or you must follow those rules. And it's not very easy to write these rules. It doesn't come easy for someone to write these rules, because you might say that, well, they just at the top of my hand, just at my fingertips. Why do I have to write them? But it's very important you have them, because it will remind you that once you get out of a trade, whether it's a winning trade or a losing trade, you should not go directly to enter another trade without following the rules. And it's unlikely that you exit a trade and immediately you get another one in the same instrument. So very important that you form a strategy. So just to recap, choose a time frame, very important. Choose appropriate indicators, right? Define your risk. Once you define your risk, make sure as you're entering a trade, you have trading, write the rules for you to follow. Now, going to the week ahead, first of all, we recap what has happened last week. Of course, we all knew that US elections were held on 3rd, right? It was the election day all along, and there's been counting. Of course, analysts were expecting last week that Joe Biden was to beat Trump, and also expecting that the Republicans were to retain the control of the Senate. Of course, you understand that the US elections is not only about who wins the presidency. It's also very important to see who will be controlling the Senate and the other house. Again, on Wednesday, the US became the first country to report a very high number of cases. The COVID-19 again is a big challenge, even as the other parts of the world is continuing to get the same challenge. Even here in the country, we can see we have this challenge as well. Again, last week, Bank of England and of course the Federal Open Market Committee, that's for the US, they had deliberations on their interest rates, and Bank of England had their rate at 0.1, and US maintained their interest rate between 0 to 0.25. Of course, Bank of England, because they've been really, the UK has been battered by the COVID and shrinking of the economy. Of course, they are also facing issues with the Brexit. Of course, the government has continued to offer purchase of bonds to even a higher value, of course, as a way of boosting the economy. So after last week, the key events that you're watching on this week, especially today, for the CHF, that's the Swiss franc, going to talk about the labor market, of course, the unemployment rate. German, that's going to affect the euro. Japan, also their leading indicators there. So today, you expect some volatility in those currencies. Tuesday, tomorrow, China Consumer Price Index. Of course, UK again talking about the unemployment rate. So we can see that we have news or events around the labor market or the labor sector, right? Euro, German, the surveys. On Wednesday, New Zealand interest rate decision, France, Canada, all those that you see there. GDP for the UK. So you see GBP or pound is really going to be affected by events around the unemployment rate and GDP, as you can see there. US Consumer Price Index on Thursday. On Friday, we have Euro and the US, of course, having some events that are likely to cause volatility. So the products to watch this week, again, gold. Remember, gold is a safe haven, just like the US dollar is considered. And of course, it has turned bullish over the past few, especially on the those election days for the US. Slightly, it has just checked on the 1950 level. And of course, we have some volatility slowing down, maybe waiting to see what's going to happen now that Biden has been called out, right? So it's not been officially announced. So we'll wait and see what's going to happen. So the safe haven metals like the golds, it's trading, checking on the charts, it's trading above the 100 and even the 50 moving averages. That's an indication that it still remains on a bullish trail. And we're likely to see the bullion or the gold going to check the levels of 1990 and 2000 as it was the highs for the previous. If it loses that bullish momentum, maybe it goes below 1915, then of course we're likely to see a fall all the way to 1900. That's gold. And then because of the events coming up in the US and also the Japan, of course, last week we saw that the US dollar fell a little bit against the yen, of course, because of the pressure and uncertainty from the US elections. So looking at the technicals on the charts, the US JPY, USD Japanese yen, they are trading below the moving averages, right? They're below the 100 and 200 SMA, and depending on how the elections goes, of course, if the traders are able to push the pair towards the 102 and 102.55, then we might see, if it breaks above that level, we might see it moving even higher. Currently, it's hovering around 103, so just likely to go and test the moving averages. If it breaks above them, then we might probably see an upside. But again, that one is subject for us to watch. Important levels currently, it's at 104 and 105. So again, for the ones who are really interested on the stocks, of course, companies continue to announce their third quarter earnings. Today we have the Norwegian Cruise, McDonald's, Adidas on Tuesday, Wednesday, EON, and Cisco, Disney, Globant, all those happening this week. So that's what I have for today. Unless if I need to touch up now that we have Biden being on the lead currently, maybe look at various scenarios that might happen. Of course, we don't know whether that Trump will challenge the elections, whether it will be successful, because they've been trying to file cases here and there, some getting rejected by the judges, but we don't know what will happen there. Of course, if the cases go out there and if they have something substantial to support them, then you might see some if we get some contest, then it's going to give some uncertainty. But now that if Biden has really shown up that victory, of course, we're likely to see a rally, because it's expected that Biden might have trade-friendly policies, and of course, the way it is considered, might be going to commit to the international organization and trade agreements that might boost investment on the dollar. So Biden is likely to strengthen the bilateral relations, and that one is likely to play out very well in the markets. So that's my bit. Over to you, Churchill.
Thank you very much, Matthew, for your presentation. And for questions, you can actually send in your questions via the Q&A section or the chat section, where we currently have a question for Churchill. Milkangari is asking, for the bonds of the coupon rate, if I'm assuming this, if the coupon rate is 13.20 and withholding tax is 10%, does that mean that you only make 3.2% when you invest in a bond? Churchill, maybe you can take us through that.
Thanks, Milka, for that question. Ideally, the withholding tax is on the coupon. So in this case, the 10% will apply on the 13.2% coupon rate. So it will be 13.2% minus 1.32%. It will be around 11% thereabout, not on their 100. So it will be on the coupon rate. So I hope that clears. And the withholding tax usually applies at the point whereby the issued bond is above 10 years, and this is the case with the European papers, which are 15 years and 20 years respectively at their time of issuance. Of course, right now they are around 7.5 and 7.4% respectively, but the withholding tax still remains at 10%. But if it's a bond that is 10 years and below, that is 15% withholding tax. on the coupon rate. For infrastructure bonds, they don't have a withholding tax. So yeah, that explains it.
Another question from Amani Wanjau is asking, please comment on Diamond Trust Bank as a long-term buy. Churchill?
Thanks. Let me just look at some of the fundamentals, the metrics for the Diamond Trust Bank. Its current price, or rather as at the end of last week, it was 61 shillings per share. It has earnings per share, which was 20 shillings and 70 cents. It has a dividend yield of 2.7. 2.7. It's quite attractive compared to some of the peers, except Stanchart. So that's quite attractive. It has its price to earnings is at 2.95 vis-a-vis an average of 6.7 for the banking stocks, and price to book at 0.28 vis-a-vis 0.91 for the sector. So in terms of those metrics, valuation metrics, how we call them, they look attractive. They're quite cheap. If you look at the price to earnings, price to book, they're quite attractive for a long-term buy consideration. But that said, we are not quite looking at it as aggressively as the other banking stocks that we have in our coverage. Right now, we are primarily looking at KCB, Equity, and Absa, but for long-term buy, even Diamond Trust Bank, just looking at the current price multiples, they're quite attractive for long-term buy.
Okay, thank you very much. I think there's another question for you, Churchill. Does the PMI Index rating have an effect on the stock market?
It doesn't have as such directly. PMI is basically what I call the diffusion index. Basically, it's doing a survey on some of the sectors and some of the private sector market players. I think the current PMI survey is close to 400 businesses, but it's spun out across all the different sectors in the economy. So just looking at it's considered as a leading indicator because it surveys different facets of a business, be it what is the output, what is the production levels, what is the employment trends, what is the orders by these businesses. So it's somehow considered as a leading indicator of the economy. And we know that even what happens in the economy also translates into the financials. So more or less, it can be a good sentiment of what is happening in the economy, and also a forerunner of even the sector performance, but going forward. That said, the PMI index for Kenya is usually a composite index. If you compare with other developed markets, you see that there's a PMI for manufacturing, PMI for services, so they sort of segregates them into those two categories. But for Kenya, it's basically a composite index. And this also translates to the fact that if you look at the NSE, in the NSE, the stock exchange, or the sectors that are on the NSE, they are basically the services, or they fall under the services. If you look at the telco, which has a 50% market cap. If you look at the banking, that's another 30% market cap. So those ideally fall into the services. So if you look at the PMI, it may not tell us that, okay, this is even the direction of the market that will be, but it's a good indicator of the economic trends or the economic outlook that will further translate into the financial markets earnings going forward.
Thank you very much, Churchill. Now, that was Ian Wangai who was asking that, and he added another question for Mathew. For Forex, are there other commodities traded other than gold? Mathew, maybe you can highlight on this.
All right, good question there. Thanks for being here, Ian. Yes, there are other commodities, and in addition to the gold commodity, we have platinum, there is copper, there is silver, there is cotton as well, there is oil. Of course, the Brent and WTI. So there are so many commodities which are offered there, of course. And maybe to understand commodity more, it's a good which is very, very important and is really traded mostly. But currently we've been speaking about gold a lot because of course that's what facing a lot of volatility, because of course gold is a precious metal and it's considered a safe haven. So a time like now when people feel that there's a lot of risk outside there investing on of course there are those commodities or those portfolios or assets that are really risky. People are get on risk off mode and they want to trade gold and maybe dollar. But yes, maybe to go back to your question, there are so many other commodities in addition to gold, platinum, copper, silver, cotton, and even oil.
Okay, thank you very much. Churchill, there is a question, two questions here which I'd like you to handle as one. There's one, Jackie Oliwa is asking, wondering why the buy recommendation for KPLC while they've reported the worst results in decades. And then another question, is Kengen a good buy? I think there are two sides of the coin between these two companies, whereby one is making losses and the other one is making huge profits, while the one is selling to the other. Churchill, maybe you can highlight more on this.
Thanks, Dan, for those questions. For KPLC, we had a speculative buy on the counter. This is just coming out from the news event that came out last week that they were seeking some electricity tariff hikes to the tune of 20%. So that's where our speculative buy is coming from. Looking at the fundamentals, we're not quite bullish on Kenya Power as compared to Kengen. At least it's more fundamentally sound as compared to Kenya Power. So for buy on those utilities counters, we are more positive on Kengen as opposed to Kenya Power, just looking at the fundamental basis of those businesses. The costs are still quite high vis-a-vis the revenues on Kenya Power, but at least Kengen has been on a diversification spree. So that's where our bullishness is coming from on those businesses.
Okay, thank you very much. Francis Kamau is asking, it seems NSE indexes are being supported by Safaricom only. Is it time to sell Safaricom?
Well, that's an interesting observation, Francis. It's true that Safaricom accounts for a bigger weight at the NSE, 50% of that. And you see to a large extent, the direction of the NSE is basically driven by Safaricom's counter, and even how the foreigners are looking at the market. They're heavily skewed at Safaricom and the other big blue chip stocks. But that said, looking at even how the foreigners trade the market, they look at it from the indices, more particularly the Morgan Stanley Composite Index, whereby there are a number of stocks. I think Safaricom, KCB, Equity, EABLs are on those indices. To an extent, I think Coop Bank should be added into one of these big composites. So it's attractive, even that's how the foreigners look at it. So I would say that it's an outright time to sell, but looking at the fundamentals, looking at even the earnings that are being reported today, we are seeing in terms, we expected that there could be a dip on M-Pesa revenues. That has panned out. We were looking at 14.8% decline on M-Pesa revenues, just looking at these measures that were put in place to support the economy in terms of COVID-19 measures. 14.8% was the expectation. What came out was 14.5% dip on M-Pesa revenues, and even looking at the earnings per share on the counter. Last year, same time like this, it was 88 cents. It has come down to 82 cents. We're looking at 83 cents. So many investors look at it from the fundamental or what's the outlook on the businesses or on this particular business. But right now we are not quite, we are just waiting with at the expiry of the current M-Pesa relief measures, what step will now be taken? Because already we've seen that it's been hurt from that perspective. But that said, we are looking at the data now. People are working from home. Most people are working from home. So whatever dip in M-Pesa or on the voice revenue is being offset by data revenue, and that is quite critical even in terms of looking at that businesses, even as an investor. So those are some of the things that investors are looking at, as opposed to just looking at it from a broad perspective that Safaricom sell, or it's more it's one of the as opposed to looking at it from the fact that I just need to sell because of X factor, but on a more fundamental basis, I think there are some opportunities in Safaricom to bounce back.
Okay, thank you very much, Churchill. Titus Parsitao is asking, my question is to Mathew. How can we start buying stocks of foreign companies, especially in the US stock market? Also, which companies have strong fundamentals in the US stock market, and which do you recommend for a buy?
Good question there. Of course, currently there's volatility all along, and about the stocks that I would recommend you buy, I wouldn't really say outrightly that buy this stock or don't buy this stock, but of course, I will tell you the expectations of the market is when Biden gets in, of course, we might expect to see more stimulus, right? When you see more stimulus, of course, that one means well for the economy and trying to raise the stock companies there. So as I've been speaking, as of my presentation there, the stocks to focus on is, of course, the ones that are announcing their third quarter earnings. I talked about the Adidas, the Disney, Cisco, Globant. It's very important because once the announcements are made and once they give their earnings, that's when you know the performance of that stock, right? But talking about the indices, again, need to look at the tech companies. And, you know, previously we had Trump having issues with companies from the tech companies. But when Biden comes in, then we're likely to see a little bit of a better environment for all those companies. So currently, I wouldn't say buy these stocks from a given company, but let's keep watch on the tech and of course the ones which are announcing their earnings this week.
Okay, thank you very much, Mathew. Margaret Kimani is asking, what is your professional researched view on Cooperative Bank fundamentals? Buy, hold, short-term or long-term? Churchill?
Thanks, Margaret, for the question. In terms of our target price for Cooperative Bank is around 13 shillings and 96 cents. Right now, it's trading at 11 shillings and 60 cents. So that's a buy from that. On a fundamental basis, we are looking at most of its loan book portfolio is mainly composed of the government and some of the parastatals. At least that we are more positive that it won't be hurt in terms of in the current COVID-19. Whereas if you look at a loan book portfolio that is primarily composed of private sector players, there's a higher likelihood that they could be restructuring. Remember that some of the people or some of the employees had salary cuts or some of them were laid off, but that at least is not the case if you look at the government employees. At least they are cushioned. So that's the one thing that also are bullish on, that they may not be a wider non-performing loans on the cooperative books. Another issue that we're looking at is its cost containment measures that is still starting to bear fruit. So those two things, NPLs will be contained and also costs will be managed in the near term. Some of the factors that are supporting that view that it's still a buy on a more fundamental basis. Back to you, Daniel.
Ian Wangai is asking, from the US elections and Biden winning, reports of less volatility in the FX market, in the Forex market, as opposed to when Trump was president. With these knee-jerk comments on social media, what's your take on this, Mathew?
All right. Yes, of course, the comments, of course, Trump was very active on social media, and that one used to bring a lot of volatility in the market. But of course, I think, and my take on this is that with Biden, the movements in the market are likely to be affected by the policies and not mostly coming from his engagement on the media, because of late he's been politics and we've not been seeing a lot of commentary on the social media with Biden. But again, we might not know. We might have to see how it's likely to get in with the policies and stimulus and those kind of things.
Okay, thank you very much, Mathew. Mambo Miner is asking, is KCB likely to hit the historic levels around 50 shillings per share this year, or is COVID slowing down the movement? And then the second question is from Joseph Areu, who's asking, what do you recommend on the NSE 25 index, a short or a long call? Churchill?
Thanks, Daniel, for those two sets of questions. On KCB, it hit records of 55 levels. That was before COVID, around February, and right now it's been on it has been on a free fall, ranging between 30 to 37, 40 levels in COVID-19 environment. But that said, the factors that are even pushing, or even what to expect once 3Q earnings are being released, there could be some higher provisionings. That's one, and that also hits the first half earnings for KCB, whereby those increase, a doubling of loan loss provisions. That was expected. That's still expected in this COVID-19 environment. The other, and it has an impact even on the bottom line, the net income of the company, of KCB as a company. The other issue, of course, some of the investors that were bullish or positive on banking sectors were driven by prospects of dividend income. So those are the income driven investors. And right now, we are not quite positive that even for the full year earnings, that there could be robust announcements in dividend payout. So that obviously impacts even the investors who are propelled by income investing strategies. So that's also another hit, not only for the KCB, but also for the whole banking sector stocks. That said, I think it will take us a while for us to go back to the 50 levels as mentioned in the question. Majorly, we're just waiting to see COVID-19, the shock to somehow dissipate. Right now, we are in the midst of a second wave outbreak. In the event that there's a vaccine, or there could be an easing in the COVID-19 shock, not only Kenya, but across the globe, that also will even drive back the fundamentals of KCB, that will push it back to 50 levels. But we don't think we'll hit it in the next couple of quarters, just because of the shock of COVID-19 and also the second round impact on the same. The question about NSE 25, that should be on the derivatives. Don't have an answer right now, but we can be able to post it once we can be able to give a clearer recommendation once we've done some analysis. So for now, I'll step it, but Joseph, we can get in touch with you with more information on that NSE 25.
Right, Daniel?
Yes, Mathew?
Yeah, I just want to get back to Titus, something I forgot to mention. He had asked about how can one start buying stocks of foreign countries, especially the US stock market. For you to access those products, of course, you will find them on the FXPesa platform. So you just need to join and create your account. You find so many of them there, and once you get them and you select your favorite, study the charts. That's why I was talking of having a trading strategy, and you will see them on our trading platform, and you can always trade with them free, with the freedom of accessing the market when you're here in Kenya. So that's how you can start trading on them.
Okay, thank you very much, Mathew and Churchill, for the presentations today. The key thing that we've gotten today is having a strategy, and therefore in all your investments, have a strategy on where you're getting in and where you're getting out. And the good thing is that you have the tools in the palm of your hands. That is your phone, where you can download Jikuze and create an account and start buying and selling shares according to the strategy that you've set out. And you can watch market fundamentals and also trade in FXPesa, that is buying and selling. I can see Beatrice and Jeru is saying Jikuze is not working. So we'll check on that and see what is currently not working now. But as of today morning, the app is up and is working well. And Moses Onkundi is asking what is the tax consideration when trading foreign stock, particularly US stocks. Maybe Mathew can close that. You can close with that.
Okay, tax considerations. You see, what happens is that EGM Securities is an undealing broker, which means that we don't touch on any client's money. So we don't actually trade for you, but we offer you all the tools and all the support that you require to be successful. So on that note, we're not the one who are really paying you or trading for you to give you those profits. You're the one who is trading, which means you're the one who is doing the business directly. Of course, we are there to facilitate you. So on our side as EGM Securities, we will file the returns on our profits and the company earnings. But now when it comes to you as an individual trader, remember you have the freedom to trade, right? You might want to trade maybe for a few days or all along throughout the month. So it is the responsibility of you as a good citizen, of course, to declare your other sources of income when you're trading Forex. But on our side, of course, we recommend very, very strongly that if you're trading and of course you're getting an income, make sure that you declare, of course, that you have another side, another way you're getting your income, just the way you would declare if you're working somewhere and you're getting paid. Of course, there's a way you do your returns, and then you ask, do you have any other business aside? So that you're taking Forex trading as a business in addition to where else you're earning. So that's how I would talk about that.
Okay, thank you very much. Jikuze is currently undergoing a massive system update to integrate new platform, a new platform that is for the unit trust. As you know, Genghis also has a money market fund under the unit trust called GenCap Hela Imara, which you can also buy and sell. You can also invest into it via the app, and the risk is low as compared to buying and selling shares. And what we encourage is, whenever you want to buy or sell, you can either buy shares or you can buy into the money markets fund. And also there's also one person here who had asked for Mathew's contacts. Margaret Kimani is asking for FXPesa contacts. So Margaret Kimani, sorry. Mathew will share the contacts. And then
Right.
For all those thanking us, well, you're most welcome, and we hope to see you next week. And also spread the word. Tell your friends to invite their friends to come and share these nuggets of wisdom from Churchill Ogutu and Mathew Kabeere. Thank you very much, and see you next week. Have a successful week in terms of investing, and stay safe.
All right, thank you.
Okay, bye-bye.